Welcome to the workshop. This workshop is a follow-up on the workshop that we had on financial management. So financial management, I'll refresh you what we're talking about, but before this one is on investment management, and it's on how the preliminary on how you value a company. So we have several of you that are in the process of raising capital. When is Ziad? So Ziad, for instance, is in the process. He has his board meeting on Wednesday, and one of the things is he's going to show us the term sheet that he has with the valuation of the company. So how do you go about valuing a company? Being it a startup or an SME will be the base of it is really about investment management. So we will carry and we'll cover this. But before I start in terms of the agenda, I want to introduce Sami. Sami is hosting us. This belongs to Speed's BDD. And I would, Speed is an accelerator, and I will ask Sami to come, and who has been very kind to make us use the facilities over the past 2 workshops and the coming 3 workshops. So Sami, if you could tell the team what Speed is all about. Thank you.
First, welcome to Speed again, and welcome everyone here. So for those of you in the room who don't know what Speed is a technology startup accelerator. And what we actually do is that we help startups at the idea or seed stage to get accelerated within a 3-month program. We provide them with 30K in cash in return of 10% equity, and we provide them also another 30K in-kind services. That's the workshops that you get here and the space usage and anything you need to start and build your company. In the 3 months acceleration, you get sessions and workshops around everything you need to build your product and solution. From product design to product UI to marketing to sales to legal to accounting to finance. All these stuff are covered, and of course you get day-to-day coaching by myself and Faris, our CTO, as well. What also Speed does is that within those 3 months and up until demo day, it provides you also with a huge network of mentors. That Constantin is one of them, and that's 60+ mentors based in Lebanon and outside of Lebanon, who can help you in all the areas you need and in anything you're doing. Post-acceleration, when you're done, we do a big event called Demo Day. Our last Demo Day was last Monday, actually, at the Social Museum, where we had 7 of our startups pitch on stage what they have done, given the 30K you provided them with, and the 3 months acceleration. Post-Demo Day, we get up to 2 teams every batch to go to Silicon Valley to a program called LabNet Ignite, powered by Blackbox Connect. Not the best name in the world, but this program it gets up to 2 startups every batch to go there and experience Silicon Valley for 2 weeks. And it's up to Blackbox to decide who they want to take every batch. Batch 2 got a bit lucky since Blackbox asked us if we're willing to sponsor 3 teams. They were very positively impressed by the quality of the startups here. And we were able to convince the board to sponsor 3 teams instead of 2. And now we have 3 teams going to Silicon Valley in August to experience that program. Our deadline is next Wednesday in 2 days. So if anyone has a startup and wants to go through our program, please apply right now, because we want to consider you for batch 3 that starts in September. Again, welcome to Speed, and thank you, Constantin, for coming.
Sami, maybe a question to the team. So what are the criteria that you use in deciding? You have a number of applications. Why would you choose one versus the other? So what would be the 3 or 4 top criteria?
So the most important thing we look at is the team and team commitment. So we're a technology startup accelerator. We look for teams who have at least one technical co-founder who's fully committed 100% on the startup during the acceleration and post the acceleration. Legally speaking, we require 6 months of commitment, but a startup is at least a 5-year journey to start with to get something significant out there. So we expect people to be really committed and passionate about that and building it. And we require teams to be at least of 2 people, 1 technical, 1 business, or maybe 2 technical, one of them has a little bit of a business mindset. Other than that, we look at ideas that are scalable. And by scalable, I mean not only Lebanon. We mean at least Middle East and North Africa region, and hopefully something that can scale worldwide and globally. And this is very important, given that you want something that can go big out from here, and we look at it very seriously. And the third thing is also the qualities of the team. We look at people who are passionate, but who are still coachable, because you need to really have a lean model and to be able to pivot here and there every now and then and figure out what works and what doesn't work. And what we tell you to do at speed is potentially what not to do, not exactly what to do. And we hope that you're gonna be able to take that and take the feedback and progress to the next step. So these are, I think, the major criteria we look at for in the startup.
Maybe last one before you go, since we have here. I mean, you, Veritech has invested.
Yes.
You have other investors in Speed. What?
Yes. So, to give you a small brief, Speed was founded by 4 major founders and benefits joined them. So it was initially Veritech Fund 2, MVP Impact Fund, and 2 independent organizations that are Badr and Lebanon for Entrepreneurs. And at some point, IM Capital came on board as well and matched the other 2 investments, and they're part of Speed. So it's the first ecosystem-backed tech startup accelerator in Lebanon that both the VCs are on board, and you also have the independent initiatives and board members who are also helping in the mission of creating the next big thing out here.
Very good. My last question then is, Sami and Veritech are fun. What would be the expectation from a shareholder? We've invested in you. So what will be your 2 or 3 elements that we expect you to deliver upon if we look 3 or 5 years down the road? What do you think these would be?
So the hope for Speed is to be the engine of high quality startups for the VCs in the country to invest in. Now, even though we have 3 shareholders that are VCs, they basically have no exclusivity or first right of refusal on anything that comes out from here. So anyone can invest in startup come out from Speed without any exclusivity. Now the expectation for our shareholders and their goal is potentially to have a really strong pipeline in the market that can funnel into their investments in the future, whether right now, in a year or 2, or down the road. And the goal is that if we get every year maybe 4 or 5 really good startups out of what's going through Speed, this is already success based on international standards. Like in a batch of 10 startups, you expect 2 to excel, 4 to break even, and 4 potentially they would fail. So if we can reach that kind of statistics, that would be awesome.
Very good. Any questions, Sami?
From my side, no, but if anyone wants to apply, it's the right time.
How many startups you have now?
So we have invested already in 30 startups, 6 in the first batch that graduated January 13, and 7 that graduated.
6 exits, no?
Not exits, these are 6 that we invested in and that are still running. And 3 out of these 6 have got offers for investment, written offers of investment. So
what's your maximum capacity here?
10.
10.
So we look for 6 to 10 every batch.
Every 6 months?
Every 6 months.
6 months, 10. 6
Yes.
to 10 would be.
So 3 months preparation for the batch and 3 months actual acceleration. We can
Very
host up and work with 10, but so far we've been very strict on the quality, so we didn't want to lower the bar. That's why we didn't take 10 yet. We took 6 the first time and 7 the second time. And to be honest, it's the biggest struggle in this market to get high quality startups and entrepreneurs.
Good.
Those are the best.
Very good.
Any other questions?
That's purely tech.
Exactly.
She's in non-tech,
Everyone's welcome.
but I feel very strong about her business model.
Welcome, you have to watch that because I would welcome myself.
Yes.
If you have some innovation component, we would look at it.
She does. She does.
We need to see what that is.
Yeah. Good. Thank you.
Thank you.
Thank you.
Thank you. Okay, let me maybe follow up on, I was there during the demo day, and what you see around, you see these tables, each table is one company. So, and you see the owners are around the table, so Hala is on her table, and she has stood up in front of the audience. There was more than 300 people, investors and media people, and they've done an outstanding show in terms of presenting their ideas, presenting the value proposition, and it was really quality, business angel type of quality, so this is great. And now instead of only showing this, I'll show you also another example, which is an end result. Rida is in the back. Rida is part of the first wave. Rida is part of the, lives in Barcelona, he's Lebanese. He has created his company. It's a very unique product, true IP potential behind it. And Rida currently is being assessed by both IM Capital and Veritech. Maybe others also are in it. So we're talking now about potentially he started with a valuation of maybe $300,000 when he started, 10% at 30K, and now he's looking at valuations which are 10 to 20 times this amount over a period of 12 months. So what you do is this accelerator comes up and brings the potential out of companies like this, and we hope to be able to close with Rida and his company we have our IM Capital board meeting tomorrow. We had the one for Beritech, the investment committee tomorrow. The one for Beritech took place with Sami about 3 weeks ago on it. But this gives you an example that you have, and we want to encourage young Lebanese entrepreneurs. This here, the accelerator, helps in terms of preparing them. The next phase afterwards is trying to get larger amounts of funds. It could be 100, it could be 200, or it could be in the millions of dollars in this case, and we're here to be able to support this environment. We have Ziad. Ziad has been part of the Fund 1. He is the CEO and owners of Cardio Diagnostics. This is a company where we entered. It has a certain valuation. He has been approached now by an investor with valuations which are 10 times higher than what he was valued about 4 or 5 years ago. So these are other examples, real life examples of Lebanese companies that have started in accelerators or on themselves and being able to come and grow. So this is not pie in the sky. These are real cases. This is real money being invested. Riyad Salameh is putting $500 million on the market over the next few years and the past years. This is 331, but you have other initiatives besides 331 that are here to encourage SMEs. I had dinner with a couple of investors. They're setting up a $50 million fund. This is an SME fund focusing on Lebanon, focusing on SMEs, and not only in tech, in non-tech sectors. So these are areas that you could, so all this ecosystem is working together. People know each other. So what we're doing today is basically one of the services that we provide. One of the services is to host you, like he's being hosted here on the table, having access to the Wi-Fi, having access to the training. Another service is to be able to coach, so to be present. So Sami is doing this with the team. He has a number of mentors that are here to support. We want to do this on a more structured basis, especially if we're putting $3 or $5 million in a company. We want to make sure that this $5 million is going to create value. So for this, we're institutionalizing a coaching program, and IM Capital, Beritech are looking for coaches who are willing to dedicate 50% of their time to follow up the companies, and they will be compensated like any coach will be in order to be able to deliver the service. What we do here is another one, which are workshops. So these are the toolkits. So we provide you the tool, then we take the coaches, take the tools and apply it within these different companies. Okay, so these are some of the services that are provided in order to help facilitate this ecosystem. Any questions on this? No? Very good. So what we done last week is we covered the basics of financial management. So what we said is we looked at financial statements and we looked at the applications of financial statements. So in financial statements we had 3, remember this. The first one is the balance sheet. The balance sheet is a snapshot at one point in time, typically at the end of the year, of what the company owes and how the company has financed it. They could finance it externally. How do you finance it externally? Your suppliers or bankers, or externally, or you could also finance it from shareholders. So this is the liability side and shareholder equity. The asset side is what you own. Typically it's your cash, typically it's receivables with customers, and typically it is stock if you are producing some goods here and then are stocking these goods to be able to recover, and you have some plant property and equipment. So this gives you a snapshot. It tells you what you own, and it tells you how you financed it. The income statement is not a snapshot. Its income statement is over a period of time. It could be a year, it could be a quarter, or it could be a month. How much revenue did you generate? What were the expenses related to these revenues? And how much profit or losses took place? So this is over a period of time, and all of you have to report and have to file to the government, to the tax authorities, your balance sheet, and also your income statement. And based on this, you will decide how much you would be charged in terms of taxes. So income statement and balance sheet are 2 very important elements. The third one that we have covered, which is equally important, is the cash flow statement. Because you could have a strong balance sheet, you could have strong shareholder equity, you could be very profitable, but you could be bankrupt. Why? Because you did not manage your cash flow very properly. So this is an issue that is taking place with a number of Lebanese companies today. Why? because a lot of their cash is in the pockets of their customers. So this is why it's extremely important that you manage your cash flow and you manage all the inventory levels, which are the basic sources where your cash is, in order to make sure that you're not in a situation where you are profitable, you have a strong balance sheet, but at the same time you're bankrupt because you're not in a position to be able to submit your cash flows. You submit and meet your cash flow requirements. So these are the three statements. Now again, the balance sheets are the assets. Most importantly, in Lebanon, you have some cash, but most simply is in receivable and inventory. If you're manufacturing. If you're not manufacturing, inventory is gone. It's primarily in receivable. You might have some plant property and equipment. And for a lot of the IT companies, a lot of it is also into goodwills as you develop this. The way you financed it, liabilities, your supplier, short-term debt or long-term debt. You have bankers present here during the session. They're here to be able to assess you and based on this decide to issue short-term debt or long-term debt. The difference between the two is your share owner equity. Share owner equity is basically your assets minus your liability. It is equal to what? To what we define as the book value of a company. This is the accounting value. This accounting value is always lower than the real value of the company. If I look at Ziad, and he has submitted, as of 2 hours ago, he sent me his financial statement. So he had an income statement, he had his balance sheet, and he has a certain book value. Now the book value of this company is significantly lower than the value that the investor is looking at investing in his company. And it could be a factor of 10, it could be a factor of 20. Now the question is why? Why would the accounting value of a company be significantly lower than the book value? I'm sorry?
Liabilities part.
What do you mean by liabilities part?
Because the assets are financed through either the liabilities or the ownership.
They are. I'm talking here the book value meaning the share owner equity, which is the difference between your assets and your liability. This is the value. In the case of Ziad, let's say his value is about, his net book value is about 200,000 K. I forgot what the number is. Let's say it's 200,000 K. His value, he said, Constantin, now I'm offered at 10 million. How come Ziad's value here of 200,000 is completely different from the real value that or today he's sharing with us a term sheet where he's valued at 50 times this amount of money? Goodwill. Goodwill could be one. Goodwill is one element here, is maybe he has some intellectual property that is worth a lot that is not reflected in his balance sheet. What else beside goodwill? Come on, you've been... I'm sorry?
Book value for assets.
The book value, some of the values of your assets are below their real value. So these values is below. If you have land, you mentioned the land is reported at historical value, the real value is significantly higher. What else? What are the other reasons? Yeah, who said? Raja, potential growth. So what you have is what you have here is a snapshot. It's today. So in Ziad's case, it is today. This is the situation. But what Ziad doesn't share on his balance sheet is what are the number of deals that he's going to close in Kuwait and in other countries that are going to generate substantial revenue and substantial profit in the near future. This is not reflected in the balance sheet. This is its future. This future has a certain value, and this reflects in the market value, which is significantly higher than his book value. Are you with me? So we had intellectual property is one reason. You know, goodwill is another reason. You have the other reason is the way you account for your assets. It could be lower than the real value. The others is the future. What is in the future? What is sort of future is? In the case, I'm mentioning these because I'm following the two companies and they went through and we'll be going through the investment committee. In the case of Rida, his company is not even existing. He has a certain valuation. There is not even revenue being generated. In the case of Rida, the revenue generated might be in 6 months down the road. It might be in 12 months down the road to get revenue, but he has already a certain valuation, although the company is barely, you don't barely have the legal papers. So this is because of the future that you present, and the real discussion between investors and between you as owners of the company is how realistic is your future, and we are here to be able to validate whether it makes sense. When Rima comes and say, Constantin, this is my grandfather's business, this is what he has done, and this is what I want to do, add to it and be able to market it, and this is what the future look like, we discuss the future. And discussing how can we shape this future together and how can we translate this future into financial projections that would affect the valuation in case, because all of you would have the same common denominator, all of you will be looking for equity or for debt in order to be able to fund your transformation. Okay, so this is the balance sheet. Any questions? I think it's clear in your mind, and I'm refreshing for those who were not here. Income statement is easy. This is how much revenue you are selling. These are the different costs. 3 categories of cost. One is the cost of producing the good. She's producing soap. This is soap. She's adding essential oil behind it. She has raw material to pay. She has her workers to pay, and she has to depreciate the value of her machinery. This is part of cost of goods sold. What happens behind it, revenue minus cost of goods sold, is gross margins. This is your gross profit. You deduct from it her salary. She's not part of the production. The rents that she is paying, Rima is not, so all this is sales, general and admin expenses. You get to operating profit, second level of profitability. Gross profit, operating profit, and this is the most important value, is the value of how much profit is being generated. Afterwards you deduct interest and you deduct taxation to get to net profit. So the difference between the income statement is your revenue minus the expenses give you a net income or a net loss. This is the second financial statement. The third financial statement is cash flow. It's a crowded slide. What you bear in mind is cash could be spent or cash is received. You have 3 ways to spend cash. Either from your operation. You sell goods, you're getting money out of it. This is cash from operation. You are paying also salaries. It's cash out of operations. You could get from investments. You're buying property, you're paying cash out. You are selling property, you're getting cash in. So this is investment. And a lot of you are going to be investment decisions. The third one is about financing. Financing, you're going to a bank, you're getting loan, it's cash in. You are paying back the bank, it's cash out. You're paying interest to the banks, it's cash out. You're paying dividends to your shareholder, it's cash out. So in and out, you need to manage your cash flow quite well. And most importantly, and this is what I've discussed in the past, in the case of all of you, it's not only about having your financial statements ready. In the case of Ziad or the case of, is show me what is going to be your cash flow forecast. I want to see what is going to be the cash flow over the next 6 months, and I want to see how you're going to finance it. And this is a question that a number of owners of startups do not know. And if you don't know how much money you need. You need to know this. You need to be on top of your cash flow the same way you should be on top of your revenue, the same way you should be on top, this is the whole cash flow, on top of your revenue or on top of your balance sheet. So cash flow management, cash flow projections is critical, because if you don't manage it properly, most companies run out of business because their cash flow forecasting is not accurate and because they don't spend the time on it. So if you don't know how to develop a cash flow forecast, you have to start and you have to be able to manage it. Okay, this is the message behind. What do we do with all these? And then we build up. All together, all of you who were present on Wednesday of last week, we build up based on these accounting entries. None of you were an accountant. We build up the 3 statements. We build up a cash flow statement, we build up a balance sheet, and we build up an income statement based on these 9 accounting entries. And if you have questions on it, I'll be more than happy to send. Now this is all good. Now what do you do with it? What you do with it is you're trying to understand, I'm going quickly on the slides, what the bankers would do. As I said, we have some bankers here. They will say, show me your financial statement. The first thing they will say when you apply for a loan or when you apply for an investment, give me your past 3-year financial statement. This is the first thing they'll ask. What else would they ask? So you're applying for a loan, or you're applying for equity. You're going to Kafalat, or you're going to Sami at Beritech. The first thing he will ask, show me your past 3 years, if you had 3 years of operations. What else would they ask? They will ask for the team. They will ask who is the team. What else would they ask? They will ask for a business plan. So transformation plan, a business plan. Show me what you're trying to do. Show me how you plan to do it. Show me how you differentiate versus your competitors. All this. What else would they ask?
Valuation metrics.
They could ask for valuation metrics, but at this case, it might be too early because we'll develop it together, but valuation could be one. What else would they ask? To get to valuation, what do you need? You need what? You need projections. So typically they will ask for the past year. Now for a startup it's difficult. In the case of Ziad, he has it. In other cases Rima has it, but some of the startups don't. So it's going to be projections. But if you have the past, show me the past and show me the future. And I want to see what sort of alignment there is between the past and between the future. So this is quite important. What else would they ask? So they will ask for historical financial statements. Again, balance sheet, income statement, cash flow statement. They will ask for the projections. They will ask for a business plan. They will ask for the team. They will ask for the drivers in terms of valuation. What else would they ask? So they have all these documents. What else?
What assets you have?
They could. They will ask the assets. But what is the most important question they will ask?
Why do you want the money?
Why do you want the money? First, how much money do you want? This is the first question they will ask. And then they will ask you, why do you need this money? Where is this money going for? What else would they ask? Once you've said, how much do you need, Ziad, money? $1.5 million? Ziad is a conservative guy. If you ask Rida would tell you $3 million or $4 million on it. So Ziad will ask, then he gives me the amount of money. Then we ask him, what is he going to use it for? Then Ziad would answer. What is the other question that is related to this? This could be a good question. Is there investments coming from his own pockets, or is it going to be all coming from outside? So have you invested from your own pockets, Rima?
So far, yes.
So far, yes. The time that you have put in, this is quite important. When we do valuation, if you look at Sami or if you look at Paul, they would have two different ways. Both of them are heading to investment committee. Paul tends to be a generous guy. Sami is a more restrictive person. So they have, I'm sorry to use them because they're coming, because they will say one way to value a company, because Ziad would have his own way. When you start, he would say, how much time have you spent? How much money have you spent? This is what you want? Okay, how much do you need on this? I'll give you the same ratio in terms of valuation behind it. I forget about the future, but you say, no, the future is much brighter. I would say, fine, I believe on your future. If you want this, we give you this valuation. But if you do not deliver on your future, then what happens is I take more shares of your company. So your amount of investment is quite important. How much you have put in it, of your time, of your people's money, of your friends' money, of your family's money on it is quite important for an investor to be able to value it. Now the question is, he has the 1.5. He's told me what he's going to use it for. What is the other question that is related to this?
How is he going to refinance?
Okay, how is he, indirectly implied in it is I want to see what sort of returns I'm going to get on this. So I want to know this $1.5 million, what sort of return, and the whole point of today's session is about deciding what is the return that we're going to get on this investment. So what we will do, and this is a critical question that you need to answer as either a shareholder or as a person who is opening the money. This is the money that I need, this is what I'm going to use it for, and these are the return that you could expect from me on it. The return, no, the return is, he's asking for 1.5. I'm willing to give him $1.5 million. I want to see this $1.5 million in 5 years down the road, how much am I going to get? Because today I have, we have, what is the name of the bank? BLF. So we have BLF. I go to BLF and I say I have a US dollar deposit, how much do I get? George is a very good friend. He would tell me, Constantine, for your nice eyes, 5.5% over 18 months paid on a quarterly basis. Is it 5.5? It's lower. Oh, it's very good. So I'll take the name. So anyway, it's higher than this. So he will say, this is the return. If I put my money in a safe, I'm getting 5.5% return. If I'm going to put my money with Ziad, how much do you think I would expect in terms of return? Higher. So this return that you get is the measure. The return on my investments is, and normally on a safe bet, I'm getting 6% or 7% or 8% if I'm in Lebanese pound or another currency. In the case maybe of Ziad or in the case of Rida, I would expect at least double, if not more. Okay, so this is the return, and I'll show you how we measure these returns. Okay, so this is important questions to lead to what we're getting into. Investment management is about deciding how you are going to allocate your money. Today, you will get the money. Where should I put it? Should I open a new office in Beirut? I'm in Trablus now in Beirut, or should I go straight to Dubai? Should I invest in expanding my manufacturing facility? Should I get a certain partnership with some of the... so these will be different, and each one of them would have a dollar, but each one of them would have also a return expectation. Okay? So any questions so far? Are you all, we're all in sync. Okay, so let me continue. So what we have, so what the bankers would do, what the BLF would do, Banque Libano-Française, is they will typically look at your financial statements, they will look at your projections, and they will come up with their own with their own ratios. Based on these ratios, they will measure how profitable you are, operating profit, gross profit, net profit, return on equity, return on sales. They will measure how efficient you are in managing your receivables, in managing your inventory, in managing your suppliers. They will look how liquid you are, current assets versus current liabilities. Can you fund your liabilities short term, yes or no, well or not well? And they will look at how much leverage you have. Kafalat has invested a big chunk. All these elements will give you a certain grade. Based on these grades, they will come up with what? An assessment. They will give you a note. The same way they will judge you how much you're worth. They will tell you this is how much we're willing to loan you based on these, and these are the interest rate that we will charge you. This is called financial ratio analysis that is used not only by bankers. Who is it used by? Who are the most sophisticated entities that are deciding on this, on deciding and giving grades to companies or to individuals on what is their credit worthiness?
Rating agencies?
The credit agencies. So give me ideas of what are the credit agencies? Moody's is one. Other examples? Finch, you have several of them. Now they've done a very bad job in predicting what is happening if you look in the future. I, for instance, was very clever at the time, back in 2008. I decided there was this bank in Iceland rated AAA. I said, AAA, I can't go wrong. You know, I've put $200,000. They were paying high interest rates. You know, I'm still negotiating now. How much will I get? Probably I will get 5 or 10% of my investment that I have done back 6-7 years ago. And this was based primarily on a rating coming from these agencies that were not updated. They were about 3 or 4 months late. 3 or 4 months late, when it's moving from AAA to basically default situation over such a short period of time, so this is why it's important that you also look at these credit agencies with certain reflection on it, because some of them prove not to be as correct as they should have been, giving the amount of money that people are paying them to be able to do the auditing.